How's it going, guys? Meme stocks are on the rise, including AMC. GameStop is also doing a stock split, which is pretty interesting news. So it looks like that a lot of these meme stocks are definitely rallying, and AMC is definitely a contender to play options on. So in this strategy, we're going to be going over to the options chain, and this is going to be a lot safer than buying calls, buying puts. What we're going to be doing is a put credit spread to triple or even quadruple your money. So we're going to be doing it about a week out, a month out, April 29th expiration date. Now keep in mind, this is just a trade suggestion. So don't completely follow what I'm doing. This is just to give you ideas to make your own trades yourself. So AMC, let's say that we think AMC is going to stay above $25 per share by 1 month. What we could do is we can sell a 25 strike put and then buy the one under it, the $24 put. And as you can see, total credit is going to be $75. This is basically going to triple our money because, as you can see, our collateral is only going to be $100, which is basically turning $25 into $100, which is basically quadrupling your money, or 4x. So obviously, if you have more money, larger account, you could do multiple contracts. Say you have $1,000 in your account, you could do 10 contracts. Now, keep in mind, you will only need to put up $250 of collateral because that is the minimum amount you need for collateral because of the credit we're receiving, which is $750. So if we have $1,000, we can actually sell 40 of these. And as we can see here, we can turn $1,000 into $4,000, which is pretty sweet in my opinion. Our max risk is going to be essentially $1,000 to potentially make 4,000. So honestly, this is a pretty good strategy. It's a lot safer than buying calls and buying puts, and especially with how high implied volatility is. If volatility drops, then these contracts are going to drop as well. And since we're selling options, we're receiving a credit, we want these options to decay, which is going to allow us to capitalize on the nice premium, the drop in premium. Because remember, when we're selling these contracts, we want the premium to drop because then if we want to close out of the contracts, we have to buy back our position. So honestly, pretty good strategy here. And if we take a look at the options profit calculator here, we have the same exact strikes, the $24 buying put and the 25 sell put. Really nice chart right here. Let's take a look at the bigger picture. Set a nice range here. And as we can see, really solid stuff. We're basically able to 300% or 4x our money as long as it stays above our price point of $25 per share by expiration. So honestly, really nice strategy here. And honestly, if you have a smaller account, this is going to help allow you to grow that smaller account to a bigger account to have more capital to play with. Because a lot of people don't have enough capital to just sell a simple cash secured put because you're going to need $2,500 of collateral just to sell one put. But when you do a put credit spread, you need a lot less collateral, as we can see here. And we're on the bright side, we're receiving a much higher minimum credit. Now, the downside of a put credit spread is if the stock goes below your strike prices at expiration. If next week it drops below, it doesn't really matter as much. But at expiration, April 29th, if it closes under $24 per share, then you're going to lose your entire collateral, which is going to be, in this case, $1,000, which isn't that much because we're only risking $1,000 to make $4,000, which is a pretty good risk reward ratio, in my opinion. And it's a great way to 4x your account size in order to get that capital to sell some basic cash secured puts, which is honestly my favorite strategy because the downside to a cash secured put is you either win on the premium, which is going to be $453 per contract, or if the stock drops under that, then you just buy shares at a cheaper price. So it's a win-win situation, honestly, in my opinion. But of course, with these meme stocks, you got to be a little bit careful. That's why the implied volatility is so high. But as option sellers, we can capitalize on strategies such as cash secured puts and put credit spreads in order to collect some really high premiums. So we're really taking advantage of this opportunity. I'm probably going to be selling some of these put credit spreads, see what happens. But of course, this is not financial advice. Make sure you do your own research and make sure you do your own trades.